Welcome everyone to the AASB's webinar on replacing the reporting entity concept and removing the option for special purpose financial statements. Since it's on the dot 12 o'clock and we are expecting a few more to dial in, I hope you don't mind if we give them a couple of minutes to dial in and then we'll get straight into it. Thank you. Welcome everyone to AASB's webinar today on replacing the reporting entity concept and removing the option for special purpose financial statements. I have with me, I will be presenting today. I'm Kandiah, Technical Director of the AASB, and I have with me Justine Keenan, Senior Project Manager, who is leading this project. Now, before we go into the crux of things, I do want to know how many of you here are from the for-profit sector, the not-for-profit private and not-for-profit public sector. Please could you put in your feedback into the polling question that's on your screen. The screen shows that about 75% of you have voted. It would be great if all of you give us your feedback from which sector you are. That will help us in our presentation. Okay, thank you for that. So it looks like about half of you on this webinar are from the for-profit sector, 25% from the not-for-profit charity sector, 1% from not-for-profit private other, and 23% from the public sector. That's great. Thank you. Now, the next polling question I have for you is, do you or your clients prepare general purpose financial statements, tier 1 or tier 2, or prepare special purpose financial statements? Could you also please give us your feedback on that? Another 20 seconds more for you to put in your input. It would be great if all of you on line can give us your feedback on this. Thank you for that. So the feedback is that about 31% of those online are doing Tier 1 general purpose financial statements, 15% doing Tier 2 RDR, and 54% doing special purpose financial statements. Thank you, that's great. Now on the screen now you have our agenda for today. So basically we will be running through with you the key proposals in the consultation paper. At the same time, along the way, we'll have some polling questions to get your feedback or initial thoughts. And lastly, we will have about 15 minutes or so at the end of the session for questions and answers. So what's the purpose of us issuing this consultation paper? What's our objective? As most of you may know, the IASB had issued its revised conceptual framework in March of this year. So our objective is really to ensure that entities that want to maintain IFRS compliance and entities that voluntarily do so can continue to do it. So to ensure that they can do that, we need to bring the revised conceptual framework of the IASB into Australia and make it applicable. This is in line with the AASB strategy and FRC's directives, which is also for the AASB to develop its accounting standards using IFRS as a base. Now, in bringing the conceptual framework into Australia, we have realized that there are two issues that we have to actually resolve so that the application is smooth. So what are the two problems? The first issue is the reporting entity concept clash, and the second one is the special purpose financial statements problem. Let me talk to you about the first problem, which is the reporting entity concept clash. So what is this clash that I'm talking to you about? Now, the IASB, a revised conceptual framework, has a concept of reporting entity, which basically says any entity that is required by legislation or otherwise to prepare financial statements is a reporting entity. And basically, its reporting entity concept sets a boundary of what it needs to report. For example, if its sets of activities are a group, then it needs to prepare group financial statements. If its activities are basically limited to an entity, then it prepares a single entity financial statements. Or if it wants to portray its activities as a portion of an entity, for example, because it's going for listing or an IPO or a demerger, then it can prepare a portion of an entity as part of its financial statements. So that's really the revised conceptual framework's concept of reporting entity. However, this is quite different from what we have in SAC 1 about reporting entity, because in SAC 1, it says that if you are a reporting entity, then you prepare general purpose financial statements, and if you're not a reporting entity, then you prepare special purpose financial statements. Now, on this slide, I have an extract from ASIC's Regulatory Guide 85, and I've put it on here so that you can see how the different terminology, how the way the concept is applied in the IASB's conceptual framework can give you a different interpretation of this paragraph compared to if you applied SEC 1's interpretation. So if you look at the term reporting entity in this paragraph using the IASB's lens, then what this paragraph means is that if you are a parent of a group that is required by legislation or otherwise to prepare financial statements, and if your boundary of activities is a group, then you have to apply AASB 127 and prepare consolidated financial statements. However, if you read it with the lens of SAC 1's concept of reporting entity, then looking at this paragraph, you would interpret it to mean that if you're a parent and you have a group, however, if you're not a reporting entity, that is, you're not required to prepare general purpose financial statements, then you wouldn't need to apply the consolidation standard. So this puts to you that the concepts can give very different outcomes of how the standards are being applied. So as the next slide here shows you, that's why this problem has to be resolved, because it's too confusing to have two concepts. And to ensure that we can continue to maintain IFRS compliance and there is confidence that the IFRS requirements are applied properly, this clash of concepts needs to be resolved. Now, some might say, well, to avoid the clash of the two concepts, why don't we just rename the Australian concept? Now, to rename the Australian concept, we need to amend the revised conceptual framework. The AASB has put out a standard setting framework outlining criteria that we need to comply with to make modifications or amendments to a standard. And those criteria are basically based on, we only do modifications if it is to improve financial reporting, and if it's overall going to benefit the Australian economy, and it's overall going to improve consistency and comparability in financial reporting. Now, changing the name of SAC1's reporting concept to something else is not going to achieve that. And the bigger elephant in the room is that it's not going to resolve the special purpose financial statements problem that I'm going to talk to you now. So what is the special purpose financial statement problem? As I alluded to you earlier, SAC1 has this concept of reporting entity, and entities go into SAC1 and do a self-assessment of whether they meet the criteria in SAC1 to be a reporting entity or not, in which they then determine whether they prepare general purpose financial statements or special purpose financial statements. So this has resulted in a free-for-all special purpose financial statements for non-reporting entities, whereby entities decide what they report in this special purpose financial statements. And to actually put it out there, Australia is the only country in the world that allows self-assessment and allows entities that are required to report publicly to determine what type of financial reporting they would do. So this concept of self-assessment in SAC1 has to be resolved because it's not an easy concept to understand and apply. And we've also found that a lot of entities that do the self-assessment just focus on one criterion in SAC1, which is about whether there are users. And they ignore another key factor in SAC1 about economic significance. So this has resulted in two similar entities preparing vastly different financial statements, and has resulted in additional risk for directors, preparers, and auditors. Now, on your slide, you will see this is actually a real-life example. We have just sanitized it to remove the names of the entities for privacy reasons. So you will see Company A and Company B, both in the gaming industry, both subsidiaries of UK parents, having hundreds of customers and employees and earning millions of dollars. However, Company A prepares general purpose financial statement and Company B prepares special purpose financial statements. So therein lies the anecdotal evidence that two very similar companies prepare vastly different financial statements. So all in all, free-for-all special purpose financial statements really can't continue under the Australian accounting standards. We've also heard that directors are choosing special purpose financial statements to avoid complying with the new accounting standards like leases, or to avoid disclosures like related party disclosures. And really, those are not criteria in SAC1 to determine whether you prepare special purpose financial statements or not. And for those out there that say that, well, they are preparing special purpose financial statements because they have no users, we have heard through our preliminary analysis and research that there are users for those that lodge publicly with their regulators, because credit analysts actually plow through the financial statements that are lodged with the regulators and pick out certain information to do their algorithms and credit ratings. So really, they are a very keen user of the financial statements. And then you have the tax office and investors from multinational companies. And now the general public is also a user. And that's why you have these amendments coming through for significant global entities through the tax requirements. And don't forget the media. We are getting a lot of pressure from media, where media is saying that entities are not disclosing related party information, and similar entities in the same sectors are preparing different types of financial statements. So all in all, that's why we think action is needed now. Also, just to share with you that the AASB has a directive from the FRC and also has to meet the ASIC Act objectives to maintain IFRS compliance for those that are required or voluntary want to do so, and to also ensure that there is trust and transparency for entities that are required to comply with the Australian accounting standards. Section 224 and 229 of the ASIC Act does direct the AASB to ensure that entities that are required to prepare financial statements in accordance with their standards need to ensure that there is consistency and transparency in their reporting. So now I bring you to webinar the polling question number 3. So you will see that on your screen. And we are really interested to know, for those of you that say you are preparing special purpose financial statements, do you actually comply or prepare it in accordance with the full recognition measurement requirements? Can you please take a minute to answer the question? So the feedback is that 51% of those that are online and doing special purpose say they comply with full recognition measurement. 25% say no, they don't comply with recognition measurement, and 24% are saying unsure. The next question is, do you prepare consolidated or equity accounted special purpose financial statements if required? Now, some of you may not be required because you don't have a group, so that's okay. But for those that do have a group and are doing special purpose financial statements, and if in accordance with the standard you would otherwise prepare group financial statements, are you currently doing so, or you're not, or you're unsure? Can you give us your feedback? Thank you. So 49% of you are saying yes, you do prepare consolidated financial statements, 38% say no, and 13% say unsure if required. And the next question is quite a lot on the screen, but really we're asking you for those, again, that are preparing special purpose financial statements. There are 4 permutations of the question. If you can take a bit of time to read, and then we'll probably give you slightly more than a minute to consider and put in your response. Thank you for your feedback. So the finding is that 50% of those that are doing special purpose online here meet all the recognition measurement and the minimum disclosures required. 11% meet all the recognition measurement, but less of the minimum disclosures required. 32% meet some recognition measurement, but disclose all the minimum disclosures required. And 8% meet some recognition measurement and less than the minimum disclosures required. Thank you for that. You've been very patient. I'll now hand over to Justine Keenan, who will take you through the next set of our session.
Thank you, Carla. So I'm going to just talk about, firstly, what we're not changing. So we aren't going to be changing the public lodgement relief under ASIC's, under the Corps Act, under Section 1408 of the Corps Act. We're also not changing the small large proprietary test. So under the Section 45A of the Corps Act, companies currently have to determine whether they are small or large based on consolidated revenue, consolidated assets and employees, and that consolidation is done based on the accounting standards already, so there's no change in terms of our proposals. The other thing that we're not changing is where an entity is not required by legislation or otherwise to prepare reports in accordance with Australian accounting standards, we will not be making, our proposals will have no impact on those entities. So by that, we're not saying it's the end of special purpose financial statements for everyone, because there will be entities such as trusts, small associations, small companies, small APRA funds, self-managed super funds that are currently preparing special purpose financial statements, and they can continue to prepare special purpose financial statements. So once again, just to reiterate, it's only when you're required to prepare financial statements in accordance with legislation or otherwise that you will be caught by these proposals. So what are our proposals? We're proposing a two-phased approach to applying the revised conceptual framework in Australia. In the short term, we'll be applying the revised conceptual framework to publicly accountable for-profit entities and other entities that voluntarily comply with IFRS. Those amendments we're hoping to issue it by the end of this year, and those amendments will take effect from 1st of January 2020. All other entities in the short term will continue to apply the current framework and maintain status quo. In the medium term, we'll apply the revised conceptual framework to every entity, and we will be performing extensive consultation over the next couple of years to further understand how to apply that revised conceptual framework and what it means for other entities. The other thing I want to mention now, and we'll probably mention it a few times today, is in terms of the implementation date for the medium-term approach, we are proposing to have the for-profits go first, followed by the not-for-profits, but we'll talk about that a little bit later through some of the other slides. So just to reiterate, the short-term approach will apply to all entities that have public accountability, for-profit entities that have public accountability, and all other entities who voluntarily comply with IFRS. And because they are already preparing Tier 1 general purpose financial statements. We are also going to make a minor amendment to the definition of public accountability. We're just making sure that it's identical to that in IFRS for SMEs. So that's also included in the amendments within the consultation paper. Once again, just to reiterate, in the short term, all other entities will continue to apply the existing framework, and they will continue to apply the Australian reporting entity concept, and if they are a non-reporting entity, can continue to prepare special purpose financial statements. Just to go back on, because sometimes there's a little bit of confusion as to what we mean by public accountability. What we're meaning here is the definition which is in the IFRS and the Australian accounting standards. We're talking about for-profit private sector entities that have debt or equity listed in a public market, or if they're in the process of doing so. Also, those for-profit private sector entities that hold assets in a fiduciary capacity. We are not talking about the not-for-profits. We're not talking about public interest here. So it's very much about, you know, your listed companies, your banks, your insurance companies, your credit unions, all that's on the slide. So I'm going to stop now and ask you a quick question around, are you a for-profit company which would meet the definition of public accountability, and are you currently preparing special purpose financial statements? So thank you, everyone. We can see that we've got a large proportion of you, almost 70% have voted. So we have the large majority saying no. So 86% of you are saying no, 7% of you are saying yes, and we've got 6% saying you're not sure. The reason I've asked this question is because for you guys who are saying that you're preparing special purpose financial statements, you will be impacted by the short-term approach, and the consultation for the short-term approach ends on the 8th of August. So we are asking you that if you have any concerns that you will be impacted by this, because it's not something we anticipated, given that we understand that most, and what we can see here, for-profit, publicly accountable entities should already be preparing Tier 1 general purpose financial statements. Therefore, if we do find that we have got these that are coming in that aren't, we really ask you to submit something so that we can better understand why you're preparing special purpose financial statements and why you are also meeting that public accountability definition. Now to turn to the medium-term approach. So in the medium term, as we said, we will apply the revised conceptual framework to everyone. Why? Because we want to maintain IFRS compliance for those that need it, and we want to maintain IFRS as a base. That will require us to remove SAC 1 and amend the Australian Accounting Standards to remove our uniquely Australian reporting entity concept, and that will help us resolve the reporting entity concept clash that Carla talked through, and also resolve those self-assessment issues and the free-for-all special purpose financial statements issues that we talked about earlier. We understand that, and we've heard that the vast majority of you are preparing special purpose financial statements. So to help alleviate some of the reporting burden, we are proposing an alternative Tier 2 general purpose financial statements framework. So at the moment, we have our reduced disclosure requirements framework. That is based on full recognition and measurement, consolidation and equity accounting, and disclosures from all of the standards, but at a reduced level. We are proposing as an alternative, so it will be one or the other, a new framework, which we're calling Specified Disclosure Requirements, which I'll talk about on the next slide. So what is this SDR that I was talking about? Well, again, it's very similar to RDR in the fact it will require full recognition and measurement. It will require consolidation and equity accounting. But in terms of disclosure, we're only asking for 9 disclosures to be made in full. The first 5 are basically what RG 85 requires. So they are, your statement of cash flows, your accounting policies, your interpretation of standards, and additional disclosures. The 4 incremental disclosures that we're asking, because so RG 85 is ASIC's regulatory guide, which is for those that are preparing special purpose financial statements. We want to make it, and sorry, I should also say that those 5 disclosures are also what is required by the ACNC requirements for the not-for-profit charities. We believe that to build it up to a proper general purpose financial statement framework, it is necessary to build those disclosures. So we're adding 4 disclosures, which we've heard users find particularly useful, and they are revenue, income taxes, related party disclosures, and impairment of assets. Are we locked down in terms of these disclosures? Absolutely not. But this first part of the consultation is really understanding whether we should move forward with this new alternative Tier 2 framework, or do we stick with our reduced disclosure requirements? So that's the main question we're asking in terms of this consultation, where the consultation period will end on the 9th of November. So I might just, and it's very early days, I know you've just sort of heard about it, but I might just ask a polling question in terms of which of the 2 alternatives do you prefer? The existing RDR or the new SDR? And if it's neither, maybe we'll talk about that when we ask questions later. Is it on? Yep. Okay. So thank you for answering that. We had about 75% of you voting. And the early favourite is SDR, where 40% of you have voted for that. 36% voted for RDR, and 16% of you said you wouldn't like either. So what we are going to do a little bit later is some question and answers. So we have started to receive your questions. We are going to hold off on answering those until we get to that discussion piece. So what is the impact? Well, clearly we know that there is going to be an increased regulatory burden, particularly from what we're hearing with respect to the consolidation and equity accounting, albeit from what we heard from today's participants is that a lot of you are already doing consolidation and equity accounting. We believe the benefits outweigh those costs in terms of there is going to be reduced risks for auditors and regulators. There's going to be much more trust and transparency in accounting, and we're going to resolve our uniquely Australian special purpose financial statement problem, and we're going to maintain IFRS compliance, which is something we've worked hard for, and we've also heard from you when we did an IFRS review that you're happy with the fact that we are based on IFRS. Now, we are also going to have some mitigating actions. So we've talked about that the Tier 2 alternative could be helpful. We're also going to have some education, and the other thing that we're really asking as part of this consultation is what sort of transitional relief would be helpful. It's particularly with respect to consolidation and equity accounting. We've asked a specific question in the consultation paper. Do you like AASB 1, which provides the transitional relief, or do you need more than that? So if it is more than that, help us understand how we can help to make the transition into this new framework as painless as possible. The other thing that I wanted to mention is that in terms of the not-for-profit private sector, and we will talk about it a little bit later in an upcoming slide, we are considering a possible Tier 3. So we will talk about that a bit later. But in terms of the for-profit, it will absolutely be a cleaner, easier framework to understand. Once you come into accounting standards, because the legislation tells you to, or your constitutional document tells you to, you will either be preparing Tier 1 general purpose financial statements or Tier 2 general purpose financial statements. And the Tier 2 will either be RDR or some sort of specified disclosure requirements. So in terms of impact, we know based on the statistics we have through ASIC and through a research report that there's 2.5 million companies registered with ASIC. Of that, there's 839,000 trading companies, and of that, there's about 24,000 non-disclosing entities. Non-disclosing entities meaning they're not listed and all the rest of it, but they are still required by ASIC to lodge financial statements. So they include all your large proprietaries, your companies limited by guarantee, and so forth. Now, if we look at those numbers, in terms of who has to lodge with ASIC, that's less than 1% of registered entities that have to lodge and less than 3% of trading companies that have to lodge. Let's look in terms of special purpose financial statements. Of the 24,000 that are non-disclosing entities, from what we know from our research report that was done a few years ago, 14,000 of them are currently electing to prepare special purpose financial statements. Again, we're talking quite small numbers if you compare that to the total number of registered entities, 0.6%, total trading entities, 1.7%. Now let's look again at some of our research and the stats that we've got here. What we do know from some research that we did do a few years ago, that of the 14,000 preparing special purpose financial statements, 3,000 of them are not complying with recognition and measurement. They're stating that. The other 3,000, we understand from the research, it's not even clear what they're doing. So they're not saying that they're not complying, but they're also not saying they are complying. And it's very hard to tell from their financials whether they are or not. But again, when we put that into the bigger picture, that's really just 0.2% of total registered entities and 0.7% of trading entities that will be uplifting when it comes to ASIC regulated entities. What about the ACNC? We have got 47,000 charities submitting with the ACNC. Of that, about a third of them are medium and large charities who would need to lodge financial statements in accordance with Australian accounting standards. Of that, 8,600 are preparing special purpose financial statements. So about 18% of charities will be impacted by our proposals. So on this slide, we've included it to demonstrate, I guess, the spectrum of reporting, if you like. So starting with on the far left-hand corner, you've got a whole bunch of people, or entities, I should say, that are really not required to prepare general and lodge financial statements in accordance with Australian accounting standards. So they can continue to do what they're doing now and prepare it in accordance with whatever basis of preparation suits them. You've also got then, as you move up the spectrum, you can see that you've got those that are corporates that will have to comply with RG 85, which requires full recognition and measurement, plus the 5 disclosures we talked about. We're saying that our alternative Tier 2 framework is a step up from that, because it's not only those 5 ASIC required disclosures, it's the additional 4 which we talked about, plus the consolidation and equity accounting. If we move up a bit further, we've got RDR, because once again, RDR requires disclosures from all the standards, albeit at a reduced level. And then we finally hit the full Tier 1 general purpose financial statements, which requires all recognition and measurement, all disclosures, and consolidation and equity accounting. So we mentioned it earlier, but just to explain a bit more, in terms of charities and other not-for-profit private sector entities, we are awaiting the recommendations from ACNC's legislative review to find out whether there are some objective criteria which we will be able to then use to potentially include an additional tier of reporting for the not-for-profit private sector entities. Because we're waiting on this, and we are therefore going to have a longer implementation period for the not-for-profit private sector, because we do want to wait to see what happens there, to see what this 3 tiers could look like. So we're sort of thinking that the top tier will be your full general purpose financial statements, your Tier 1. The middle one could be Tier 1, RDR or SDR, wherever we land there. We're even going to consider maybe it could be a modified accrual. The bottom tier could be some sort of cash standard. So again, we are waiting to hear what comes out of that legislative review before making any clear determination about what happens with the not-for-profits. The other thing that's worth mentioning is, so at the moment, this consultation paper is all about applying the revised conceptual framework in Australia, because unfortunately, unlike normally, where we can usually just drop a standard in, this is one time where we have to deal with this application issue. But like we always do when any standard or any thing comes through IFRS, we will also look at it in itself to see whether we can modify it to suit the not-for-profit sector. Yep. The other thing worth mentioning is the public sector entities. Now, public sector entities are very different to the not-for-profit private sector entities in the fact that they are already doing full recognition and measurement with Australian accounting standards, consolidation and equity accounting. Therefore, the only change for them will be, depending on where we land, whether it's RDR or SDR, if they're allowed to apply RDR in the first place or Tier 2 in the first place. We also, like I said, with the not-for-profit private sector, will be making modifications to the revised conceptual framework. I also wanted to mention that we have released a research report number 6 and a discussion paper, and we're really opening the conversation on public sector reporting, because from what we've heard, their reporting issues are almost the opposite of what we're hearing in the other sectors, in the fact that they may be doing too much reporting. So we're really just opening the conversation at this stage, and we're going to have a longer phase 2 implementation period for them as well, just so that we can really understand what's required when it comes to public sector reporting. I'm now going to hand over to Carla, and she's going to take us through some other options that the AASB considered, as well as then we'll go into the question and answer session.
Thank you, Justine. Now, on the slide, you will see that there were 4 other options that the AASB considered in moving forward with bringing the revised conceptual framework of the IASB into Australia. And I'm not going to go through each of these options, but I'm just flagging to you that there were different ways that the AASB considered in bringing the conceptual framework into Australia. Now, the next thing is about IFRS for SMEs. Some of you may be thinking, well, the IASB has IFRS for SMEs. Why didn't the AASB think about that as a Tier 2 alternative? Because we are proposing RDR or SDR. What about IFRS for SMEs? Now, Based on the polling response today and even our previous research and anecdotal discussions with many entities, we already have a basis to say that about 75% of non-disclosing entities are already doing full recognition and measurement. So therefore, going to SMEs would actually be a big change for them because, as you know, the IFRS for SMEs is modified recognition measurement. So moving them to IFRS for SMEs, for those that are already doing full recognition measurement, is going to be a very big change. And that is why the AASB decided that that would not be an option. Now, the other thing that I want to say to you is also that the AASB is doing quite a lot of research in terms of during the phase of this project, as Justine alluded to earlier. So there's a lot of academic research that's going on at the background at the moment to understand how many of those that are doing a recognition measurement are registered with ASIC or regulated by ACNC, and what about the other organizations like cooperatives and all that, what are they doing and how will it impact them? As you know, we have a requirement to actually do a regulatory impact statement when any proposals are finalized. So we also want to make sure that we totally understand the cost of compliance of any proposal that will be actually fleshed out in greater detail during the exposure draft stage. We also want to know what is going to be the impact of consolidation and equity accounting. So any input that you can provide would be great. Now, in terms of project timeline, I'm not going to run through in detail, but I do want to flag to you, as Justine said, that the comment period for phase 1 is ending in August, and the comment period for phase 2 is ending in November. And as Justine flagged, we need to make sure that the proposals, first of all, are there and finalized for the for-profit entities. But for the not-for-profit, private and public sector entities, we will consider what comes out from the legislative review, as well as discussions with the regulators before we actually go through and decide what's in it for them. Now, I'd like to open up to the question and answer session. And we'll look at questions that we have received so far. Yes, so
yes, Carla. So we have received quite a number of questions from the participants. So first of all,
yep, if we go down, yes,
I would like to ask this question from you.
So I'm looking at this question. So there is one from public sector. It's where it says, does this mean that some large private companies, not publicly accountable, could still prepare special purpose financial statements in the short term at least? And the answer to that is yes, because they are not publicly accountable for-profit private sector entities meeting the definition in AASB 1053 at the moment, so they can continue with status quo. Okay, the next question. Sorry?
So maybe if we look at, actually I don't.
So the next question is, will there, with more than 2,000 unlisted managed funds being unlisted disclosing entities, be required to prepare general purpose financial statements, and if so, tier 1 or tier 2? So again, whether there are, so if they are unlisted and if they don't meet the definition of public accountability in AASB 1053, then they will not be required to prepare general purpose financial statements tier 1. However, we do understand from discussing with some of these fund managers and fund investors, that sometimes, even though certain managed funds are unlisted, they do have requirements that are specified in their trust deed about what their reporting should be. So I would actually suggest that you go back and look at your trust deed to say what your trust deed specifically requires. Okay, the next question is, in preparing a prospectus, ASIC says that where underlying financial statements have not compiled in contemplation of a public offering, it is generally acceptable for the financial information in the prospectus to be derived from financial statements prepared on a special purpose basis. Will this continue to apply given an entity is issuing a prospectus and would meet the AASB definition? Now, we I guess will not be saying what ASIC will require or not require. However, it is safe to say that if with the removal of special purpose financial reporting, then I suppose the reference in the prospectus will have to be to whatever form, general purpose financial statement form that is actually being lodged.
And so ultimately, I guess what we're saying is go back to the reason for preparing special purpose. So if it is legislation and the legislation is not requiring full compliance with Australian accounting standards, then you can do that reporting for whatever special purpose that legislation is required. So it's only when your legislation says you must comply with the full suite of Australian accounting standards that then, yes, you will no longer have the opportunity to prepare special purpose financial statements. And if you do meet the definition of publicly accountable, it means that you will have to prepare tier 1 general purpose financial statements.
Well, a person has said, given one question, given that medium and large charities have their accounts published on the ACNC website, should not all these charities prepare general purpose instead of special purpose? Now, I would like to clarify that, as Justine mentioned just now, that we will be looking at what the ACNC legislative review comes up with in terms of criteria and specifying a form of tier 2 reporting. And I also want to actually clarify that once we specify or clarify what that reporting is, that reporting will be general purpose financial statements. So in other words, whether it's charities or whether it's other entities in the for-profit space, what we are saying is if you're required to comply with the Australian accounting standards, then you will have to comply with the prescribed reporting requirements. So there won't be this free-for-all choosing of what goes into the financial statements. That being said, because we understand the cost of compliance issue in some of these sectors, like the charity sector and all that, we do want to consider what is needed in that sector and what are the users looking for, and actually working with ACNC to come up with what would be the requirements for those entities in that sector as a prescribed general purpose financial report. The next question is, will the new general purpose financial statement comply with the ATO GPFS requirements? So we are talking to ATO and we are talking to all other regulators. So we do want to ensure that everyone is aligned so that there is no doubling up of requirements. And as I mentioned earlier, someone had asked about IFRS for SMEs. So I do want to say that in terms of looking at modified accounting, particularly for the not-for-profit sector, we have put out a staff paper on comparing modified financial reporting requirements, recognition measurement, comparing what we currently have as full recognition measurement with what IFRS for SMEs has and what New Zealand has and what UK has. So in giving us your feedback about what that framework of modified reporting can be, or what we would like as tier 2 for the charities or the NFP sector, please have a read of that publication and give us your feedback. So there is a question here that what will be the generally accepted accounting standards if we are trusts? So if your trust fund doesn't, if your trust deed, and we have spoken to a number of those trust companies. So if your trust deed says just prepare financial statements, but doesn't say you in accordance with Australian accounting standards, then you could come up with your basis of preparation based on discussion with your members and your trustee as to what would be the appropriate basis of preparation and which standards would you want to comply with in determining what your basis for prep for your financial statements would be. So there is a question here about getting Parliament to change reporting thresholds set in law or regulation is challenging. Will the AASB proceed with the change to remove reporting entity concept, notwithstanding the inaction of the Parliament's review of the reporting threshold? As I mentioned, and as Justine pointed out, we are, flagging to, obviously, Treasury and the government is aware of what we are doing here and what we are consulting on. However, as Justine pointed out in one of the slides earlier about the number of entities that are actually required to report or lodge publicly with ASIC, particularly in the for-profit space, it is less than 1% of the entities registered. So that is really a very low number compared to what the percentage of entities registered with regulators overseas that are reporting. So I would like to say that based on the fact that it's only less than 1% that are actually required to lodge publicly, I don't think that that's actually a big justification to change the thresholds. Okay, any other questions? There's a question about is paragraph B2 of AASB 1053 changing? So as I said, and as Justine alluded to, we will not be changing the definition of public accountability based on what the IASB's definition is. However, as part of phase 1 consultation, if there are some entities that are inadvertently caught being publicly accountable because there are some entities in AASB 1053 that the board has deemed to be publicly accountable, then that one we can look at to see if there needs to be a change to that. But at this point in time, the board isn't really looking at changing the IFRS definition, but the board is open to look at anything that is done from an Australian's perspective and whether that can be looked at or revisited. Well, there is one question here about the proposed SDR is not that far from RDR, and therefore why not just use RDR, as there are other requirements of RDR that are not onerous, So again, as we said, we are in this is quite an early stage of consultation. And SDR is an alternative that the board has thought to put out. But if you have other suggestions of how what disclosures you'd like, or if you say keep RDR, that's fine as well. Or if you think that there should be employee benefits disclosures added to it, please give us the feedback. The board is very open to consider all feedback to flesh out what the Tier 2 requirement would be for a general purpose financial statement. So we're just going through the questions, and I think we have generally answered all of your questions here in one way or other. Thank you for your participation today, and we very much look forward to getting your feedback on our consultation in the coming months. And please also give us your views. Either it can be a written submission, or you can send us through an email, or if you want us to talk to you and want us to have a conversation with you, please reach out to me or Justine. Our email addresses are there, and we are happy to have a discussion with you.
You can also go through so we haven't actually put our emails there, but you can reach us through the standard@aasb.gov.au, and it will be redirected to Kandiah. Yep.
Thank you very much.
Thanks,
Appreciate your participation.